Hey guys, Mike here. So I'm going to discuss something I saw in an interview early this morning, and I found it pretty fascinating because I'm always looking for indicators in the stock market to tell me, what movement's going to happen in either direction, up or down. And with this one, it is a pattern or trend you see every once in a while, but when it happens, it tends to seem to almost predict a 10 to 15% correction in the following weeks. And so I did verify this with the charts. I'll show you that. And so, if you get anything out of it, hit the like, subscribe button for me, guys. I really appreciate it. Don't forget to use the link down at the bottom if you want to sign up for the BlockFi credit card. This is what the rewards actually look like when you start spending. I just started spending mine like over the weekend. So, it'll take quite a few purchases to build up Bitcoin. And somebody brought up an interesting point in the comments. One of our members said, well, how do you account for that at the end of the year on your taxes as far as gains and stuff like that if you sell it or whatever? And I said, you know what? That's a good question. I don't know. Never had a credit card like this. Never earn cryptocurrency on a credit card. It's just something, that's why I pay my accountant, and we're just going to sit down together and figure it out, and see what happens. And I told him I'd let you guys, obviously let you know what I'm doing or how it worked or whatever answers we come up with. But it's like anything else, when something new's out there, some kind of new investment, got to figure out how to account for it. So, I think that's why you see the government, which I sent out to members this morning, are really, really pushing for regulatory hurdles to be put in place and taxing cryptocurrency and stuff like that. It's actually in the infrastructure bill. And so, it's something we're going to see really being pushed hard over the next few months. So probably doing taxes next year might be very interesting to say the least. So anyway, I'll keep you guys updated on all that stuff. So let's go ahead and get into this pattern or trend we're talking about and how it actually predicts a 10 to 15% correction, stock market correction that is. Whether prediction is the right word or not, we'll see.
Let's get to what type of market trend has you a little concerned and on, I guess we could say, a sell-off alert right now?
Yeah, sure. So from our point of view, if you look at the last couple of months, the leadership is contained very narrowly into a handful of large cap growth, tech, NASDAQ, FANG, whatever you want to call them. But at the same time, what we saw during the month of July, as the S&P 500 and the NASDAQ were both advancing, we saw the volatility index, VIX, advancing as well. Whenever we've seen that going back to the beginning of 2018, we were essentially weeks away from a correction, the most recent one being last September. We think history could, in fact, repeat itself to a certain extent here.
And this is the article right here. Let's talk about the S&P, NASDAQ, and the VIX, which is the CBOE Volatility Index, rising together on these charts. And I'm going to show you right here what he's talking about. So if you look at last month, you can see right here clearly you see the VIX rising, correct? And you can clearly see the S&P and the NASDAQ, which are really close together, actually rising as well. And you can see both of them just for July. VIX is up 11%, the NASDAQ is up 3.39%, and the S&P was up 2.35%. And it looks like from July 20th until the end of July, that's when you see them actually rising together. And I also went back to last year, and you can clearly see it here even better. You see right there the VIX, the NASDAQ, and the S&P clearly rising together, and then there's the correction, right? And so you're looking at, I think it was a 13% correction on the NASDAQ, around 9.8% on the S&P. It just missed 10%, I believe it was, barely. And I even went back to 2018 in January, and the same thing happened. The VIX, NASDAQ, and S&P rose together, and then a major sell-off occurred into a stock market correction. And so it did it back then as well. And so I did verify that. I think on top of that as well, don't forget, we got, August and September are notorious for being two of the worst months when it comes to gains in stocks and such. And so you can see that right here. As you can see, it's pretty clear on this chart where it says August, September can be trouble. This goes from 1950 to 2020, but you can see there's different colors here. So you see the big old bar right there, that is post-election year. So you got something else to throw on top of this. You can see that is a big decline of around about 1.75% right next to it. Obviously it's lower than that. But you can see there is no gains. It's just straight up declines over September and August for the most part. And so in the other months, it's pretty apparent they move up. And then you look at the S&P 500 August intra-month performance from 83 to 2020. And what I care about is the last 10 years, which is the bottom line right there, which I'm scrolling across. And you can see leading up through that time frame is nothing but declines. And then if you look, you want one more chart, you look at monthly returns, August, September, past 10 years is what I care about, in the negative. And then post-election years, especially in August, for whatever reason, negative 1.43%. And so hopefully those charts and graphs kind of made sense there. And the biggest reason I think is because volume tends to drop in August or September. It could be because obviously kids are going back to school in August. They're obviously in school full time for those 2 months. Maybe that's what's happening. People are going back to work, that kind of thing, through the regular years. This year is a little different. And that's why I say everything we talk about, you have to take with a grain of salt, right? I mean, we've never been through this before. We've never been coming out of a closed down economy, dealing with this pandemic and stuff, and obviously with the new Delta variant, that kind of stuff happening. And so, who knows what's going to actually happen, but this right here, it could be another sign, could be another indicator. And I think leading into August, September does not help, especially. And so the one thing we really got to keep an eye on now is California, because California, I believe, is still the 6th largest economy in the world. So if they start going back to shutdowns and things of that nature, then that's going to wreak havoc on the stock market. It's guaranteed. New York's already putting in stuff. I just read today, I believe, this is what I read, was for restaurants, and it was gyms where you had to be vaccinated. Okay, so that definitely will affect the restaurants and gyms if that is true. That's what I read, at least. So correct me if I'm wrong if you're in New York. And so you start seeing policies like that, and I'm not saying they're right or wrong, I'm just saying that's what will definitely affect the market and those particular stocks. We'll see. But the other thing is, just with a very little percentage of stocks actually pushing this market up right now, which is usually your FANG stocks, continue to keep pushing and pushing. And some high growth stocks like Square was on a roll after making that purchase. They're moving up high. These gigantic companies like Google and Amazon, Netflix, things like that, just pushing, Facebook, pushing everything higher. Then everybody's having trouble figuring out where to put the money right now, right? That's another thing you got to look at. I think that's why you will see the volume slow down in August, September, most likely, because who wants to invest at all-time highs? Most people are very skeptical. I read a report on that today where most people are very skeptical, and then they don't know, like, wait a minute, what's going to happen here? Because the cruise ships, the airlines are getting killed right now, in the stock market, that is. Because, who wants to really go on a cruise right now, especially with what's going on now here in the United States? So a lot of factors we got to take into account this year that we hadn't had to take into account, from 2019 and back, right? And so it's just kind of a wait and see thing. I think a lot of people are just kind of saying, hey, hold up. I just got done talking to my father-in-law, and he's retired, and he's a successful guy, and he said, I got this money sitting here. I go, where am I going to put it? Because bonds suck. You're not getting any money off of that, really, especially with inflation. You're basically in the negative. Savings accounts, money markets are a joke. Have you seen the CD rates? That's a joke. And then you're going to be, if you go in the stock market, and he's not going to go with high growth stocks because he retired, right? So, he'd be more just looking at the Microsofts and the Apples and all stuff, but he's like, they're so high. They're higher than they've ever been, pretty much, right? And so you're like, wow, okay. I guess you can dollar cost average in on right now, but it's like, you could just kind of sit on the sidelines and see if they pull back some, which most likely will here in the next few months. So, it's just the kind of conversation I think a lot of people are having. Always interested to get your perspective on it. Hit me up in the comments. Let me know what you're doing. But, that's just kind of where we're at. I thought that was interesting from the interview today, at least. I've never heard of that. I don't know if you've ever heard of that. And so looking at the charts, yeah, it actually is true. So anyway, hope you got something out of it. Hit the like, subscribe button if you did. I really appreciate that, guys. And I want you guys to have a great night, and I'll see you tomorrow.